Welcome to the Personal CFO. Today I want to talk about volatility. I want to give us a better definition of it, and I want to give you two words that I think describe and explain volatility in a way that you can use and be a successful long-term investor. Now, why am I talking about volatility right now? As of now, it's May of 2021, because there really isn't a whole lot of volatility. And I think a good time to talk about something is when it's not staring at us in the face and we can be calm, cool, collected investors and have a discussion without being in the middle of extreme volatility, which can be pretty scary. So let's get started. Let me redefine volatility. It's a strange word. I don't think it means a lot for many people. So let me redefine it and say volatility is when your investments go down a lot quickly, right? That's really when people are talking about volatility, what they're saying is my investments are going down or they've gone down. So volatility means your investments go down quickly. Now, that can be a scary experience. And what I want to do is share two words that you always need to remember about volatility that I think will make things easier moving forward. So I want to put up this chart from my buddies over at JP Morgan, and I just want to use this chart to walk you through the important two words. The first word about volatility that you need to know is that it is common. Okay? Now, what do I mean by common? So if you look at this chart, you know those bars that are going up, what that is the ending return for the market that year, and this goes back to 1980. Okay? So when I say volatility is common, well, how common? Well, as you'll see, there's a dot, a red dot, every single year on this chart, going back to 1980. So for the last 40 years, what this is saying is that at some point during each year, for the last 40 years, the market has been down. There's been volatility or there's been a drop in your investments. That's pretty common, as in it's happened every single year. That is not a surprise for us. So it's common. It's not going to be a surprise for us. So what's the other word? We have common. What's the other word we need to know about volatility? Is that it's temporary. It doesn't stay with us. Now, let me tell you what I mean by that. So if you go back to this chart and you see all those red dots, so you can see all those drops. We've had volatility, big volatility, pretty much every year for the last 40 years. And you would be thinking, wow, that can't be good for the market. Well, the market was up 31 of those 41 years and averaged a 9% rate of return. So through everything we just saw, and if you'll remember, if you're paying any attention to the news, every single one of those years and every single one of those dots, the media came up with a really big, important reason why it was happening and why it was some version of the end of the financial world. And it never was, and it most likely never will be. So common, it's happening every year. Don't be surprised. Another reason why we're talking about it now is letting you know it'll happen. It's no big deal. It's common. And it's temporary. So what we know is even amidst all these red dots, we have positive long-term returns in the market. Okay, that's all we need to know. Volatility, or said another way, your investments go down quickly. Two words you need to be thinking about with volatility. It's common and it's temporary. I hope you found this useful. Thanks for investing your time at the Personal CFO.